Hi, everyone. Chris Johnson from Money Morning. And last night, while looking through some of the comments on Super Microcomputer, check that video out if you haven't already, I got a question from one of the viewers about MicroStrategies, Marathon Digital, and Bitcoin, the relationship between those three, and what I think about it looking forward. I'm going to answer that question as well as look at a couple of Bitcoin alternatives and two stocks that I like in the same area right now that I think are going to give you better exposure in 2024 to Bitcoin. Stick with me. It's going to be 5 or 10 minutes or so, and you're going to walk away with some great trading ideas. Let's jump into it. Hey everybody, like I said, Chris Johnson responding to one of the viewer questions from last night's Super Microcomputer video. And this is interesting. Bitcoin has been all over the news as we see the cryptocurrency go from was down around 50,000 to where I think it's going to be going well over 100,000 over 2024. This has been the culmination of a number of fundamental things that have happening. Let's call it a confluence, if you will, of events. First of all, we had the SEC that approved the ETFs that are holding Bitcoin now, so a spot product. You've also got just the absolute opening up of this market as we see a lot of institutions and individuals, investors getting into it. So a lot of money that is flowing into Bitcoin. One of the things that's kind of been left behind, and I love that I got this question, is what's happening with those miners? And if you look at the question that I got, could you do MicroStrategies, please, and Marathon Digitals? Why are mining stocks down when Bitcoin is rallying? Actually, there's a little mistake in here because right now Marathon is down, MicroStrategies is up. Let's talk about the obvious differences here. And I always love to go to the gold market when I talk about Bitcoin and Bitcoin miners because it's exact same, the relationship there. The obvious differences are the miners versus the product they mine. Think about gold. When they're pulling gold out of the mine, they have something that's value. We know what the spot price of gold is on a daily basis, and it's traded in the futures market throughout the day. So we know what gold is worth. But there's always a difference between gold prices and the gold miner prices. So the companies that are pulling it out of the ground. Why is it? Because expenses of pulling it out of the ground, the management and decisions that they make, that affects the price of the stock. So you're not going to have a one-to-one relationship. The fundamentals of the companies will always matter, and in many cases, they'll actually trump the value of whatever gold they may be holding in their balance sheet, or obviously the price of gold that they're able to sell as they mine it. So that is one of the huge differences, and it applies with Bitcoin. Things have not changed as much as the technology is vastly different. So going back to Marathon Digital and MicroStrategies, what happened here? Well, about 5 years ago, these companies became a proxy for Bitcoin. Why? Let's face it, it was difficult to go out and buy Bitcoin. You couldn't buy partial Bitcoin at one point. If you hadn't gotten in early, it felt like there was just no way to do it. And what happened is Marathon Digital, as they started to open up and become a mining company, a digital mining company, along with MicroStrategies, it offered investors a way to invest in Bitcoin via a proxy, just like a gold mining company and gold. So in other words, you don't want to go out and buy an ounce of gold and put it in a safe. Maybe you go out and buy ABX or you buy a gold miner, right? In this case, they served as a proxy for Bitcoin. It was easy to purchase, easy to trade. You could trade options on them, bought and sold like any stock. You could do it in any brokerage account. That was the benefit of the gold miners, and it's the same with Marathon Digital and MicroStrategy. So the market got crowded, started floating into these stocks very quickly, and that's why we saw these meteoric rises as people wanted exposure to Bitcoin. Then along came a couple of other proxies. If you remember, we started to have some of these ETNs. Now, those are notes, the exchange-traded notes. One out there was Grayscale Bitcoin, right? And they actually traded in the Bitcoin futures market. Now, the difference, and let's talk about proxies versus the actual underlying here. The difference is you're going to have, again, that fundamental price difference because of management, right? Volatility of Bitcoin is also going to affect MicroStrategies or Marathon Digital, right? But at the same time, the decisions that their management makes is going to affect the underlying price as well. So that volatility is based on two different things. The thing I always like to look at in these situations is the relative strength of the company against what it is that they're mining. So you can do this with gold companies, but in this case, we're doing it obviously with the Bitcoin mining companies. Now, the chart you've got here, it is a relative strength looking over the last year. So it's comparing Marathon, MARA, against the GBTC, that grayscale Bitcoin trust. And you can see this volatility in the price here. Bitcoin against Bitcoin is going to give you a 1. I'll show you that chart in a second. But this is more or less the premium that you got for investing in Marathon, and then the discount. Now, on the right side of that chart, you are below 1, which is right here, which means it is better off holding Bitcoin at that point than it is Marathon. Now, let's focus on MicroStrategies. MicroStrategies has gone the other direction. So instead of going down to a discount against Bitcoin over the last month or so, it's actually trading at a premium. So the way to understand this easiest is if I put $1 into Bitcoin, let's say a month or so ago, and I put $1 into MicroStrategies, the dollar in MicroStrategies would actually be returning more than Bitcoin, even though Bitcoin's been going through the roof. That is because of the premium of MicroStrategies, their management team, etc. I'm going to go back to the chart on Marathon because something happened just a month ago, or a little under a month ago, that is affected. You'll see this huge drop right here. They missed earnings. So again, Bitcoin doesn't miss earnings. The thing that they're mining and holding, it doesn't miss earnings. It's a constant price. It changes, right? And they're holding a lot of Bitcoin. Marathon Digital is around $1 billion, a little over $1 billion against their $4 billion market cap. So about 25% they're holding in Bitcoin. There's a fluctuation there, but this drop was due to the company missing earnings. And when I go back to that MicroStrategies, MSTR, notice that it's going higher. That's because they've got a little bit fundamental edge over Marathon Digital, you can call it, but they're improving their fundamentals here, and investors believe it, and that's why they're willing to pay up. I mentioned the volatility of one against the other. Just for the number nerds out there, here's your Bitcoin versus Bitcoin. Relative strength is 1. That means obviously it is just based upon itself. Again, a trivial chart. I always like to point it out. So why would you use a Bitcoin proxy now? I mentioned the SEC came out with the Bitcoin ETFs, and they are spot, so you can buy them through an ETF, trades like a stock, right? The best proxies right now, I think, are these ETFs. If you want to own or allocate part of your portfolio to Bitcoin, it's going to be best done through something like the Grayscale Bitcoin ETF, ticker symbol GBTC, or the ARK. I like the ARK 21 shares Bitcoin ETF, ARKB. Why do I like these? They've got low expense ratios. Just like a mutual fund or any other ETF, these are going to have an expense ratio tied to them. ARKB is one of the lowest out there. I like that. If I'm looking to just invest in Bitcoin, I want as few of expenses as I possibly can have. Otherwise, I'm looking at a situation where I might as well own one of the miners where the expenses can be all over the place. These are still easy to purchase and trade. And guess what? Options are coming soon. The SEC right now going through the process of looking at how they're going to get the options traded on the Bitcoin ETF. So all you options traders are going to be able to leverage moves or protect the downside if you want to get a little protective put insurance on your Bitcoin portfolios. Now, I mentioned at the beginning, there are 2 stocks that I still like as proxies over Marathon Digital and MicroStrategies. Both of them in the news here lately. Let's take a look at the charts. I always like to just pull up a chart. First one, Robinhood. Robinhood, as you know, is that easy investment application that you can use for a number of things, everything from stocks to options, Bitcoin as well. One of the reasons I like this is because, as I mentioned, with the approval of the SEC ETFs, we now have a new wave of investors that are adopting Bitcoin as part of their portfolio. You still have a lot of people like Jamie Dimon that are out there saying, I'll never own Bitcoin. That's not going to change. But the number of people that are adopting Bitcoin is much larger. And over the next year, I expect to see a lot of cash coming into this area of the market. Robinhood is one of those areas where it makes it easy to purchase, obviously, the Bitcoin ETFs. One of the things that you're seeing going on here is that their assets are going through the roof as well. After a long time of having shrinking deposits after the pandemic trading phenomenon blew them up, you're seeing those assets going in the right direction. That means more trading volume for Robinhood. The other is Coinbase, COIN is your ticker symbol there. And it is the same situation. More assets coming into Coinbase. You're going to have more of a tie with Bitcoin because there are some assets, obviously, in their portfolio that are held in Bitcoin. Nonetheless, two of these, I believe, are better proxies than Marathon Digital and MicroStrategy. So there you've got it. And both of those are optionable as well. I do want to point something out. At some point, we will see a correction in the market. And the difference between these two companies is you're going to see trading volume go down across the board. Both Robinhood and Coinbase are going to be exposed to that as a risk. So keep that in mind in terms of if you're expecting a pullback in the market, that always shakes up trading volume. And that's how these companies get paid. So there you have it. The old school proxies for Bitcoin. And that would be your Marathon Digital and your MicroStrategies. I think they're going to see a little less trading volume, a little less popularity. And for that reason, I try to stay away from them. The volatility is just not worth the payoff here. The first way that I look to get into any Bitcoin exposure is to start looking at those ETFs. ARKB right now is one that I've got experience with. I do hold those shares. Low management fee is always what I look for in an ETF. And if I want to get exposure to a company that would be a proxy, as well as an opportunity to benefit that premium of the management of the company and the activity, I'm looking at Coinbase and Robinhood right now. I think the added exposure, and as we see the expansion of Bitcoin investing in other cryptocurrencies, they will benefit in assets coming into their companies. There you've got it. Everything you need to know to start diversifying with Bitcoin. Until the next time, make certain that you're leaving comments and questions below. Obviously, I answer them. Make sure you like and subscribe and do all those things so you keep getting this great content. I'm Chris Johnson, wishing you the best trading success.